So we have some futurologists from the world of venture, from mid-market, large buyout, and probably as importantly, we have someone from the external critical community, as I like to call it. We have Sir Brendan Barber with us. Sir Brendan was asked by the UK Minister for Industry to head up the Employment and Conciliation Service following a very successful career in the trade union movement in the UK. And he has been a fierce critic, but also I think an advocate for engagement with our industry. And so it's great that we've got him on the panel as well as we start to look ahead to the future. And of course, the future is always great with the benefit of hindsight, as one of my bosses told me many years ago. And I think what we're hoping to do in this session this morning is follow on from what we've heard from the politicians and talk a bit about where are we heading as an industry. And with that in mind, I think Thomas has kicked off the discussion very well when we're talking really about what is our license to operate, and if we have a crystal ball, how is that license to operate likely to evolve from a reputational perspective, from expectations, from stakeholders' perspectives? So maybe, Brendan, first of all, some thoughts on license to operate and how are we doing and where are we heading?
Okay, thank you, Rory, and thank you for the invitation to take part in the discussion this morning. As you say, my background is a working life spent overwhelmingly in the trade union movement, so good morning, sisters and brothers. I mean, I think we have to acknowledge the economic circumstances we face in Europe, that although the high point of the financial crisis may have passed, there is still a real crisis of living standards, very high levels of unemployment, particularly high levels of youth unemployment, real cuts in public services, in the welfare state. So a big questioning about the social model in Europe. Where does that stand? What's the social vision for Europe? In terms of private equity, of course, it's not that many years since the sector was coming under really very intense scrutiny. And what were the challenges? What were the accusations? The accusations were that this was a model that was about short-term profit-taking. Even in some cases, it was alleged asset stripping of major corporations. That after major buyouts, there were aggressive, unreasonable, major restructurings which took no or little account of the interests of the workforces concerned. That these were decisions being taken in the shadows, that the owners of these enterprises were not publicly visible and accountable in the way that people had come to expect in large public companies. These were taken by the shadowy private equity, emphasis on private figures, who were the owners of these major enterprises. And who were these private equity figures at a time when the debate about top pay and fat cats was beginning to emerge very strongly? These were some of the plumpest felines around, the leaders of major private equity funds. So those were some of the challenges, some of the accusations that were laid at the door of private equity. Now, as you say, I was very much an advocate of engagement with the sector. Yes, to ask them to think about those issues. Was there a view, for example, about employment standards? Were there some core principles, perhaps, that the sector was prepared to acknowledge about proper treatment of workers? But also that challenge of transparency. And in the UK, I very much welcomed the initiative that was taken by the EVCA with the report that was commissioned from Sir David Walker, that came up with new proposals on reporting requirements so that private equity-owned portfolio companies much more closely aligned to the kind of transparency standards that people had come to expect in publicly quoted companies. So those were some of the challenges. Just to say finally, and then please pass on to other colleagues on the panel, there is a sense perhaps that that period of scrutiny has passed, that the sector came through a storm, it certainly worked very much harder to engage, to try to explain its work, its focus in much more active ways with wider stakeholder communities. But I would urge there should be no complacency at a time when a part of this continuing crisis is rampant and growing inequality. There will still be a major focus. I mean, the crisis has not just raised huge questions of legitimacy about the way the financial sector operates, and private equity is absolutely seen, of course, as part of the financial sector. It's raised questions about the whole basis of decision-making in major corporations and companies that affect the livelihoods and well-being of millions of people across our continent. So I think it would be right for the sector to continue to think actively about how it engages, how it thinks and addresses some of these challenges on transparency, on employment standards, and certainly not rest in any complacent way on thinking that that time of scrutiny has passed.
That's very insightful, Brendan. I think resting on our laurels is something clearly we mustn't do as we look ahead. Thomas, do you want to come back on some of that? I mean, how, as you, obviously your speech, you talked about some of these issues. Come back maybe on what Brendan said.
Yeah.
Are we in a better place? Are we resting on our laurels?
I think we are, depends evidently which country we talk about. Now I'm come from Sweden, so we're the top of the agenda because we're into the public funded sector when it comes to healthcare and schools. With that said though, our industry, and I think the problem with this industry, like it is with all industries, is that if you have one bad apple in the basket, it contaminates everybody else. So collective punishment is used brutally, at least up in the Nordic. If we have a bad apple, or a bad private equity firm, the whole industry should be regulated and disappear. And the only way to meet that, according to exactly your lines, is transparency to show what we do. For instance, we have just concluded a study to show how much tax did we pay when we bought the company, the whole tax base, how much did we pay when we sold it. But what's even more important, how did this company perform 5 years after ownership? Has it grown? Has it died? Because that justifies our reason to exist in society. Because there's so much rumors, reputation, and clearly a very, very strong left wing in Europe today, which I think is extraordinarily dangerous for growth of Europe. But the only way we can meet it is with total transparency. We have nothing to hide. If we hide it, we shouldn't operate.
And are you exporting that from Sweden? I mean, you talk about Sweden as though...
Yeah, oh sure, we are...
You're more enlightened?
Yeah, we are, evidently our presence is Benelux, Germany, and Nordics. And wherever we are, if a journalist calls us, we will take the call, we will talk about how our company performs. We'll also evidently talk about the bad eggs. Because we do mistakes. But whatever we can do is just, if we can fight, and I'm extraordinarily proud of one thing, in our buyout fund, we haven't lost 1 out of 60 companies. So nobody can ever say that we're a bad owner. We have been saving companies, making virtually no money for the sake of making them good. That's the kind of behavior society, trade unions, politicians should demand of people with so much power and money as private equity sector has today.
Great. Well, you mentioned also in your speech the role of LPs and their expectations, and also that they need to have their own set of rules around license to operate, but also expectations on us. And maybe turning to Hans here, and Hans is somebody I met when I first joined the industry, and at that point he was heading up the EVCA after a very long career with Blackstone, and has his own mid-market company here in Germany. Hans, what's your thinking about LP expectations? And as you look to the future, do you think LPs are going to change their demands of what they expect from us?
I think LPs are pretty much in the same position than we are as GPs. So what is true for us is true for them. So they are also more and more perceived as somebody with a huge economic power by being big pools of capital. And as we heard this morning, Mr. Draghi being the true king of Europe, there's a general perception of those who can control the flow of capital are actually those who are making decisions. And I think by the same token, there is a challenge on legitimacy of how they distribute their money to various uses. And we are only part of that. So I guess to understand the consequences of this whole societal debate about, what is right or what is wrong with the systems we all benefit from, I guess LPs are in the same position than we are. Maybe I have to say those LPs who are here for a long time, who are institutions in a way that they either manage pension money or are part of the institutional financial market. Other LPs have emerged, like the several sovereign wealth funds or the family offices, who probably do not fit into the same box. But those who have been feeding this industry for 45 years with most of the money face the same sort of questions and questioning about their legitimate power they undoubtedly have with distributing their money. And then the next consequence is, how does that feed through to us? And I guess we all do very well when we try to understand how pressures emerge that the whole industry, no matter LP or GP, has to face. And I guess the key insight I had from working for 5 years with EVCA and also on the European front is everything is grassroots level. There's no such a thing than a global stage. I mean, that's a consequence of many grassroots things. And the bad apple example is when you have probably one very small, insignificant, economically insignificant private equity fund owning a company in the constituency of somebody who is an important political figure, and you would be surprised how many great people come from the meadows. And there it creates a problem, no matter how big or small it is. Then we have an immediate effect on the whole perception of the industry. And I guess this is not clear to everybody. I mean, I had the benefit of being with a pure European group, VC Partners. In the beginning, I was number 15 in this whole group. Then with Blackstone, which was one of the first global groups, and now I'm with the National Fund. And the lesson I've taken away is, regardless whether you are global or national, you have to take great care of what you do on the grassroots level. And I think this lesson was not fundamentally understood by all participants in the industries when you saw kind of very scary headlines like "Masters of the Universe strike again." This is a sort of lingo that is super counterproductive. And when I saw great firms having people responsible for an investment without having ever been there, without even being able to speak the language. If you invest in Spain, you better have somebody who understands Spanish and who understands how companies work. I would be very reluctant to run an investment in France because throughout 50 plus years of my life, I never understood, and I will probably never understand how France works. But if somebody gives me a company in France, it will be a program disaster. And I think this is a change that many of our fellow companies have not completely understood. We are not capital market. We are real economy investors. We are kind of a link between the capital market, the organized collection and distribution of capital, but what we do on the front end is and will always be grassroots stuff. And I guess this is also something that leads to misperceptions, that leads to allegations, sometimes rightly so, I have to say, but it can be cured when we invest more in making sure we can be responsible owners for our companies, and this requires to really understand the grassroots level issues that come with companies.
Turning to Amit, and Amit clearly as an innovation leader, a very prolific career both at AT&T, Vodafone, and now with Ariadne, where I know you are looking at a lot of the sort of disrupt type technology type companies. What is your sense from LPs and in terms of what their expectations are, and are you seeing a change there? Do you as you talk to them about innovation and innovative companies?
Absolutely, Rory. What I'd like to do is, thank you very much, just set the scene before, and then the impact on the future of Crystal Ball for LPs and GPs. We are at an unprecedented level of disruption. I don't think we've ever witnessed it in history, and we'll ever come across that again. What I mean by an unprecedented level of disruption, WhatsApp. You know, it took 4.5 years for a company to get to 500 million consumers. You know, those numbers, it took, when I was at Vodafone, it took us 20 years to get to 200 million consumers. This company did it in 4.5 years, bought for 19.5 billion with 53 employees. Uber, there was discussion about Uber and regulation yesterday. In 10 months, the valuation has gone up from 3.5 billion to 18 billion. So we really are in an unprecedented level of disruption. And I think the European private equity and VC industry is really up for a shock. And why do I say that? Because yesterday, when I made a comment, within our community, we've got over 92,000 entrepreneurial companies. And they meet great VCs, lots of engagement, and it's come back to us when you've got 2 years more trading history. We do Series B, Series C, later stage investment. If we take, not necessarily that the US does everything right, but Mark Andreessen, who's probably one of the best VCs in the US, just put a posting out over the weekend, the rise of early stage VCs in America. So 2012, the US VC industry declined with the level of capital raising by 10%. Declined 10%. You compare that to early stage investment funds in the US, they had an increase of 51%, 9.37 billion raised to invest in early stage companies. That's who Europe is going to be up against, competing against. Now, if I put that shift into what does it mean for LPs, GPs, Europe doesn't necessarily have that many great seed fund, early stage fund investors. And that means you've got to have a different due diligence process. You've got to have a different network. You've got to have a different deal flow. But the other one, which I think is really, really important, you've got to become the trusted confidant of those entrepreneurs in that early stage. And I'm not sure if we're ready to have that shift. That's a seismic shift without being negative. The plus side is actually Europe has more early stage communities compared to the US. There's 266 compared to 260. So the entrepreneurial ecosystem or clusters, wherever they are, Berlin, Heidelberg, Frankfurt, London, Cardiff, they're there. But the investment community needs to shift. And then that means the whole due diligence process and the transparency, which Thomas was referring to, is going to be key. Otherwise, Europe will really lose the next generation of disruptors.
I would have a question. Do you think people have a lot of respect for a company that is worth 19 billion and employs feeds 53 families? I mean, isn't that the sort of things that people get fed up with and say people make billions, but it's 53 families, maybe 300 people who actually carry the thing and do it.
Without dissecting, I've got respect. The day Facebook acquired WhatsApp, we were hosting a 20 intimate dinner with 6 leading corporates, 14 disruptive early stage companies, and we had Ludwig from The Economist. And if you've not read Ludwig's paper in February about platforms and disruption, it's the best read. And Ludwig said to me, he goes, I don't understand why this is so big a deal. Facebook only paid $3.5 billion. Yeah? And I'm a firm believer on responsible capitalism. Yeah, to your point. We should be caring about it because those 500 million customers. I mean, WhatsApp has grown twice the pace of Facebook and Twitter combined. Their customers, their community, they value this. They value this more than they value Vodafone or Telefonica or O2. So I would really, really say that we should be, and that's maybe part of the issue with European culture, we're always keen to knock down the failures and criticize successes. Yeah, Europe has a track record of creating great companies. But, I would say, what, that's incredible. 53 employees. Actually, I think 5 were part-time, by the way. But whatever the number. I mean, they are geniuses. They're absolute geniuses that they can build a global, scalable business at a fraction of the cost in 4.5 years because they're riding on behalf of somebody else's infrastructure, highly regulated, low margin, and that's where they're going to make the money.
And is that the future? I mean, do you expect to see? I mean, are we going to see carbon copies of this in other areas? What do you think, Amit?
Every industry will be disrupted. Every industry will be disrupted. You're seeing it in the hotel industry with Airbnb, which I think market cap of 10 billion. Intercontinental Group. How many years has it been going? Just had an offer to buy out for £6 billion. Right. You pick it. I cannot think of one industry that will not be disrupted by the digital revolution and mobile revolution.
This is so interesting because evidently we're different parts of the food chain. But I'm in the big buyouts, and I actually own this hotel called Scandic Hotel, where Expedia and Booking.com suddenly came in and said, you know what, I give you the customer through our website, and I'm going to have the best price, and I'm going to take 20% of your top line. That's virtually all our profit. So that's only the start. So what's going to happen, and this is for us, we're in the buyout sector, we are actually close to our companies. We can change, we can adapt new things. What's going to happen with the poor quoted companies in the stock market, where we have boards that are risk averse and paid for doing nothing? We need to deal with it. We're flesh and blood. If we don't act, we go bust. So I'm paranoid about what you say. So we are just flushing in the best of the brightest we can find in Berlin, Stockholm, London, and we pay them whatever to get them in. These 30-year-olds that tells us 60-year-olds that they're going to eat their breakfast and lunch and dinner. And the 60-year-olds say, I don't believe you, and then it happens. That's exactly what we're doing right now. But that's also why private equity is needed.
Absolutely.
Because if we don't have a private equity industry who actually propels this change, Europe will be breakfast for the Americans or the Chinese.
But gentlemen, we are convincing ourselves about something that is light years away from those who are going out the street. We had a demonstration in the most expensive part of Hamburg the other day of 1,000 people claiming the dismantling of capitalism. I mean, these people, we can talk days about these things, and I can appreciate and I can enjoy this discussion. But I guess the thing where we started from is, what is the legitimacy of our industry? And I guess we just have to also understand from the way how we communicate that most people who have doubts, who are insecure, and who are prey to those with bad intentions to create an attack on our industry will talk to, and they will listen to them. And I guess this is something that we all have to be very, very, very aware of. And I mean, it's great to talk about economic success and super returns and everything like that.
But also, I think, what we're hearing is that disruption is at highest levels ever, and maybe next year we have the guy from The Economist here, because it sounds like he's quite provocative. But that's probably also going to change thinking too, Hans, that actually if we become identified as an industry with this disruption, is that going to change how people perceive us?
But the question is, when people lose their jobs because the hotels cannot make money and you kick them out, they will say it's a bad capitalist that pays so much money for these companies and gives them so much power that they can destroy jobs on the grassroots level. I mean, if we like it or not, but that will be the reaction. So,
but that's why we need a transparency. That's why we need to tell what's happening, and each private equity fund should show how much employment have I created in the UK. Show us the numbers, and it's not only acquired but organic. And because we need to prove our right to exist. And you're exactly right, because the guys in Hamburg, they would like to delete us, and they don't understand the consequences of that, but it doesn't matter when we're dead. We need to prove our existence, we need to be transparent, we need to take the debate.
But it's not just jobs, is it? It's what quality of jobs. And is there a kind of broader vision about how employment and people's working life fits into this economic development? I mean, it is an irony, isn't it, that the justification for what I see as these huge excesses of top pay is that to drive competitiveness, we have to pay more. And yet to people at the bottom of the labour market, they are told precisely the opposite. To drive competitiveness, we have to reduce your standard. We have to push real pay levels down. We have to erode pension entitlements. Until there is a more compelling vision of the role of work, the dignity of work, to use a rather old-fashioned phrase, then the political support for mainstream politics across Europe will continue to come under challenge.
Absolutely.
Just quickly try all three things. I think you're absolutely right. In the UK, there's a retailer called John Lewis Group, which is very, very successful, probably one of the best showcases for omni-channel retail. And they have got a partnership and a good salary model. Thomas, to quick your point, private equity can actually help these early stage, what we call digital enablers. But the reason why, because you're paranoid, and by paranoid, you can open your customer base and highway up because that's the biggest issue that an entrepreneur faces is actually not finding capital.
Yeah.
The biggest issue is customer access to scale. So I think the private equity industry is a perfect ally to the entrepreneurial ecosystem.
I agree.
And obviously then, there is the role of government here. I mean, you know, if we think, looking through, you know, EVCA spends a lot of time talking to government, looking at the role for government here, both, as Brendan says, in looking at about work and the broader issue of inequality, but then more broadly, as we look at the crystal ball, looking at our industry, what's your thinking around where government is? And Thomas, Sweden, obviously, very enlightened country. Is your government enlightened? Do they know where we're going?
No. We have the strongest leftist wind since the 1970s. And what happened in the 1970s is that Sweden went from number 3 in the world when it comes to GDP to number 24, and then we went bust in 92. And we had to take away all the nice ideologies and fix the country. We have the same wind, driven by the things you mentioned, of increasing inequality. And we have, unfortunately, fascists coming into government, like some everywhere else. We have all the issues you see in other countries. So I'm, unfortunately, the politicians, when you talk to them, they understand. But now it's election, and we are absolutely nuclear waste. Private equity. It doesn't matter. You know, they would like to regulate, stop. It's very dangerous, actually.
And so, if you look to the future, what does that look like? You mean higher taxes, more demands on transparency? What does it look like?
High taxes, and that's fine. I can live with that. I think actually, post-election, we have sensible parties and we have less sensible parties. And there's sensible parties on both sides. So Social Democrats, that's a sensible party. They will sit down and we'll talk about it. But it's going to be higher taxes. It's going to most likely be demands for increased transparency, which is fine too. All of that is okay, but we should not drive. Fortunately, Sweden is very exposed to competitive forces of the international society. If the taxes becomes too high, the capital will leave the country, and the politicians know that. So I'm a little bit hopeful.
But social standards have really been coming under pressure since the crisis hit in 2008. I mean, 30 years before that, 1988 was when Jacques Delors came to the TUC Congress in Britain. And that was at the time when the whole political thrust in Europe was towards the creation of the single market, with the intention of trying to complete the single market by 1992. Seems a little bit ironic now to think that far back. But his vision was of a vision in which this was a market in which, yes, there were single standards, open access to markets right across Europe for businesses, for the financial system, but also in which there were some standards in the labour market that were part of that vision. There was a social deal, there was a social contract. What did that mean in practice? It meant that there were, over the subsequent years, a framework of rights put into place that gave better protections for people who work part-time, for people who work on temporary contracts. The equality legislation that operates across Europe comes from European initiatives, equal pay for women. Some basic rights to information and consultation for workers affected by major changes. Now, all of that framework, which was the compelling part of Delors' vision that persuaded the British labour movement to move from a very sceptical position to a much more supportive position about the European Union project, all of that is now seriously under threat. And we see the impact of austerity across so many countries in Europe has been to rip up many of those standards, to rip up many of the bits of institutional machinery, the collective bargaining arrangements, the core agreements that determine terms and conditions of employment for millions and millions of workers across Europe. And to rise to that challenge, there has to be a new impetus towards a vision for social Europe, not just the financial world.
And as we talk about social Europe, maybe then what about from a competitive growth, innovation perspective? Amit, any thoughts there? I mean,
yeah, absolutely. I don't want to sound doom and gloom, Europe has a track record, whether we look at Ericsson, you look at Spotify, SAP in Germany, Arm, of creating great companies. But in this era of unprecedented disruption, we're falling behind the wayside. And what do I mean by falling behind the wayside? 2012, the European VC industry raised 3.6 billion euros in entirety. US 9.37 just for early stage. That European investment level was 57% drop on the golden years. Capital exists in Europe.
Sure it is.
We've just got to develop an appetite for risk. Somebody said last night. The other things is that why does it really matter? I think, Thomas, we were discussing briefly this morning. What's happening is Europe is creating these great companies, or potential to be great companies, and they're being acquired by Silicon Valley.
Yes.
And the founders are being, relocated. And take aside the monetary value, as soon as that intellectual horsepower and capital leaves Europe, it's a huge issue. When we talk about Europe has a great R&D capability, but and government. I come back to R&D in a second. Government actually has done quite a lot. When I said that the European VC industry is in terminal decline in investment, that needs to be in the context that the government EU has actually increased its investment in the VC industry from 2007 to 12 by 40%. So if we strip out government and the European Investment Fund, Matthias Hoffmann and his team's investment, the numbers would be a lot lower. Now, why does the R&D really matter? If we take the UK, which I probably know because I live in London, the number of university spin-outs coming out of the UK is in decline. Combine that with Stanford, every year 300 patents come out of Stanford University. Is there a surprise that Silicon Graphics, Google, Netscape, Yahoo, and a whole bunch of other great global companies have come out of Stanford? So what we need to do is, I'd urge the policymakers who are here and the governments, you're throwing lots of money at universities. Actually, instead of having lecturers teach them, why don't you put entrepreneurs in there like the American universities do? They have entrepreneurs go and teach, lecture. Entrepreneurship can't be taught in a classroom, can't be taught by lecturers.
That's exactly right.
So that's a huge opportunity that I think Europe needs to do. The other one is to build that holistic ecosystem. And then the plus side, before I go into a couple of areas, is Europe has, and we were talking about this, the mid-market. If you're a mid-market firm, where do you get access to all of this expertise? Combine. We run our entrepreneur country, and the whole mantra is David, which is the early stage companies, must dance with Goliaths. Why? The Goliath, the mid-sized company, has the customer access, the brand, the industry insights. The David has the passion, the 24/7 obsession to destroy an industry or to recreate an industry. So, David and Goliath, bring them together. So I think Europe does have the opportunity to do that. And that's what we do. The two things where, just to wrap up on where the future ball is, we live in this mobile era of 24/7 communication. And I was talking to Graham, who's on the board of Ofcom, last night about this. The UK and Europe led the mobile revolution with 3G. Ericsson, Nokia, Vodafone, Telefonica. If we take 4G, 75% of all business on 4G networks are in America, Japan, Korea. That's where the innovation's coming from. Europe has only 8%, so it's a rounding error. And that's the policymakers, the mobile operators need to get an act out, because what's happening is Verizon are going to say, or AT&T, I've built my 4G business, I'm just going to ride on the European infrastructure. Docomo are going to say, do the same thing. Samsung at an infrastructure level are going to do the same thing. So I think Europe needs to be much more bolder in investing in making sure there's the right infrastructure. And I don't want to be a saber rattler. In the UK, which is supposed to be a mature, developed economy, which is quite an offensive phrase to those frontier markets who are redefining all aspects of society, there are 1 million children in the UK that do not have access to the internet.
Wow.
You know, that's a lost generation. Compare that to Nigeria, where every school child on a feature phone has their school curriculum so they can get access. We know which nation is going to be more competitive down the road because the children are aimed. And then the final one, and it wasn't planned, on where Europe really can recover from being a laggard in the digital revolution and mobile revolution to be the spearhead. And it may not be a politically acceptable phrase, bearing in mind what's happened in the elections and the anti-immigration vote. Be pro-immigration. Why be pro-immigration? You take the top 25, and sorry if I use US, but that's where the majority, well, US and China, but if you take the US, the top 25 US tech companies, 60% of their founders or CEOs are immigrants. Either they're immigrants or one of their parents was an immigrant. Yeah? And what are we doing to those Asian entrepreneurs, African entrepreneurs? We're saying we hate immigrants. I tell you what, it's the immigrants who are going to create the value, and that's at a European level.
So it's a great call to action there, I think, on a number of fronts, Amit. Hans, any final thoughts on Europe, competitiveness and growth? And then I'm going to ask maybe the audience here if they have some questions for our panelists.
I think Europe doesn't hate the immigrant entrepreneur. No. We had that discussion before. I think we shouldn't oversimplify. I mean, there is legitimate worries many people have with respect to people from other countries entering their home country and not being the entrepreneur that brings welfare and growth to this company, but who is doing the opposite. So I guess it's not that easy. I guess what is needed is that we, as a society, kind of try to explain to everybody why he is able to go on vacation 2 times a year, why he is able to have education of his children at no cost and get a medical treatment that is world class. And this goes back to many, many aspects. And it's not this immigrant, non-immigrant theme, but it's much more fundamental. And then I come back to this growth issue, which we have on the agenda in this part of our discussion. I guess, yes, but not all growth is digital. And thank God there's a lot of things that have to be done with the hands and with tools and to create something tangible. And when you look at Europe, this is where I would say 90% of all European citizens are living from. Bakeries, plum pluckers, or whatever. So I guess, yes, you're right from your perspective, but coming back to what most people can touch and see, it's different. Now, also these business are facing the challenges of globalization, of course, because for them, things are changing. The hotels has the Expedias, and even those who are selling fruit have to deal with things that have to do with digitalization, no doubt about it. But the key question is, what can we do on those companies who are probably existing for 60 years already and are open for investment by later stage funds who are in the mid-cap market, and what is our role we can play for them? Because only when we have a role, we have a reason to exist. And if we don't have that role, if we cannot define that role for ourselves and for the companies we try to buy, then we are useless. And I think we are in the midst of the discussion of a useless financial sector at the one hand, from the perspective of many people who don't earn interest on their savings anymore, and who have lost money when they were following investment advice that have them end up in a Lehman paper. So I think these are true and tangible things people have experienced. Now, we have to all make sure that wherever we have contact to companies, to people, to politicians in our local Rotary Club, to try to make clear that the only way why we can exist going forward, why we have a role, is that we make companies better places to be. And that is not unidimensional, more profitable companies, but this is a balanced thing. And when we come back to, let's now talk a second on what we can do as a mid-cap investor to companies we have access to. It's enabling them to overcome a drastic shortage of equity capital that comes from biologically defined owner groups, which are family companies, At the same time, we have to win their trust that this is not the end of the world, but that is the next logical step in order to be a responsible family owner, to open that up, and then also to act accordingly. Not to say, now we own this company, we run it down, we squeeze a lemon, as somebody say, and then goodbye, like your 5 years after the exit example. This is something we have to prove. Now, everybody who is in this industry knows that basically this is how everybody exactly works. Because if I buy a company now and I want to sell it in 5 years' time, the next owner looks 5 years ahead. So I have to be long-term anyway. But again, people don't understand this. So I guess it's very simple. We have to ask ourselves the question, why am I the better owner of this company as compared to alternatives, and then to act accordingly.
And it very neatly comes back, I think, to a lot of what Thomas was saying in his speech at the beginning. I'd like to open the floor up now to some questions for the last few minutes. We have any questions from the floor on where we're heading, the future for our industry? You've heard quite a lot of fairly scary but also quite exciting prospects as we look ahead. Questions from the floor?
To Brendan in particular. So how would you propose to reconcile the inevitable impact on labor of the economic disruption that is happening around us and that we have to participate in order to defend our wealth and standard of living in Europe? How do you, that's going to create jobs that are shorter. Lifetime careers are going to be a lot more difficult to protect. The trade union movement in many countries in Europe has tended to fight a bit of a rear guard, in my view, battle often in terms of just preserve the existing job. Well, that doesn't work. If the whole of society preserves the existing job rather than favoring the new, it's going to become a lot poorer. What are constructive ways that you think can be thought of to reconcile the inevitable impact on labor markets and on jobs, on job security, individual job security, of the economic disruption that we have to participate in?
Well, I was thinking when colleagues were talking about the speed of change of a story about a former trade union colleague of mine who'd worked in the same company for about 35 years, been a very active trade unionist throughout all of that period, a shop steward, a convener of shop stewards and so on, coming up to his retirement. And the company laid on a rather nice occasion to mark his retirement and thank him for his service. And the chief executive made a few remarks, paid tribute to him, and he said, John, 35 years. You must have seen a lot of changes over all of that time. Yes, he said, and I opposed every single one of them.
So he doesn't think change is good. No.
Actually, I made that up. I mean, that is the stereotype, isn't it? Yeah. And of course, change can be difficult. But look, what's happened in the context of this recession we're still going through? There was a huge amount of practical, pragmatic engagement to keep businesses afloat, to give priority to job protection, but at the expense of often wages, working hours. There were some imaginative public policies devised to help support that as well, by the way. In some countries, in Germany, the short-time working subsidy arrangement came out of a discussion between the trade unions, the employers, the government, as a very practical way of helping to mitigate some of the pressures. And the reality is that working people they're not fools, they're not mugs. They understand these competitive pressures. And the dominant model of organized industrial relations is by and large cooperative relations. But those are enhanced where there is genuine scope for employee engagement. The biggest survey of workplaces in Britain is conducted every few years, called the Workplace Employment Relations Survey, just reported a few months ago. And that demonstrated that companies with the highest levels of engagement had come through the recession in the best order. And that's the kind of dominant kind of message I'd want to kind of leave. But it's got to be real engagement. It's got to be genuinely open dialogue. It's got to be honest. It's not just got to be actually when there's a crisis. Often when there is a crisis, then there'll be an opening up and my God, oh, you've got to help share the pain and understand the difficulties. But it should be there in the good times too. And it ought to be, there ought to be institutional arrangements that reinforce the building of trust and so on. And where that is done, then you're in a much better shape to manage those changes in a way that commands support and respect.
Any further questions before we wrap up? Vincent.
Thank you. I'd like a wonderful panel. My perception is that we've come from 4 very different perspectives on the panel, but have actually all given the industry a very, very clear message. So we have Thomas leading from the front in terms of actually we've got to be transparent, we've got to be out there. We've got Brendan talking about the real societal responsibility. I think, Amit, your view about disruption is absolutely fantastic. And Thomas, your remark about the grassroots has really hit home in my mind. But here we are, for those who know me, you're preaching to the converted here. I don't know how much we're preaching to the converted in the room, but to the unconverted, could you give us one really nice little gem that will start them on the path? Because I think we've got to speed up.
So the unconverted being unconverted investors, or?
We're not doing enough.
Within the industry, you mean?
Yeah.
Within the industry.
Well, it starts with what sort of people are you hiring for your firms? I mean, when I started in this industry, we were 15 people at BC. That was a bunch of friends who did things together. 1/3 was a managerial background, 1/3 were people like me. I was 10 years in consulting, and only 1/3 were financial people. And all of us have spent a lot of time with companies and new dynamics which have to do with people and not with analysis. And I think that was a trend then in the industry, that it became more and more kind of mimicry capital market investment conditions, sometimes rightly, sometimes wrongly. So my conclusion would be, what you said, we need to become more diverse inside the private equity teams. And this is not just a gender thing, but we must come back to have real people there. And if it's left just to analysts, to financial analysts, I think we have a hard time to overcome the negative perception, probably right so, that is associated with our industry.
I think just from an industry that's for those who are unconverted, just look at innovator's dilemma. Whichever industry, those that are established that don't move with the times end up being distinct.
So real people, innovator's dilemma.
Investors have a brand and a reputation to protect as well. And I think there will be increasing investor interest and engagement in the areas where they make their investments, because they sense themselves to be at risk. And certainly in the area of pension funds, for example, I think there is a new activism amongst pension fund trustees that are increasingly asking questions of their fund managers. Where actually are we putting our money? And what are those organizations doing on transparency, on top pay? They're holding fund managers to account in a rather different way now, I think. So brand matters to investors as well as to individual companies.
I think, and we had that discussion in Sweden, we should form an unbiased tribunal, which is untouchable, like the highest court, that assesses and appraises all bias pursued. If they're part of the BVCA, EVCA, SYCA, doesn't matter. They will give an unbiased verdict. They are untouchable people. Because we need to get a legitimacy in our industry. And the bad apple that contaminates the whole basket, we need to have a process to weed out the bad apple, not contaminating the rest of us. Because then populism comes. I feel very, very strongly about that. We need to find a self-cleansing, independent body that's going to mark the good and the bad to get credibility.
Right. Question.
Yes, I would like,
And your name?
François Lombard. I would like to ask the panel, some of our colleagues are in industry like the hotel industry, investing with funds. I will not quote names, maybe Colony Capital and others. Would you advise them, based on the emergence of new business model like Airbnb and others, that they would switch into different industries to avoid the economic disruptions?
No. This is where we sort of agree, even though it may come slightly different. If you've got an existing business like the hotel industry or whatever, you've got an asset, you've got customer access, you've got a brand, you've got processes. Don't switch out. Open out to those digital enablers. So I'll use an example, banking. We have the privilege of working with 4 of the top 5 UK banks on their digital innovation strategy. So you go into each one and they'll say, well, we really want to own private banking, wealth management. And so you say, how many customers do you have? 3 million. Actually, we got 20 million, 27 in Lloyd's, 12, whatever the numbers are. What are you doing to serve the undervalued customers? Yeah? Because there are entrepreneurs out there. There are going to be boutique investment firms who would love to get access to that customer base. So all I would suggest is to those hoteliers or people who have real businesses, who have cash flow, who know how to run businesses, look after their team members well, open yourself up as a highway to those entrepreneurs out there, and they could actually help you build your next business, whether it's in the digital hotel industry, digital banking, or another adjacent market. But go and embrace, because if you don't embrace, somebody else is going to disrupt you.
I was going to say, even in the Carlyle Group, we've embraced hotel and leisure. We have B&B, which has expanded across Italy, Germany, and we've just now invested in massive holiday budget camping accommodation group. So actually, where we're working with a lot with campsite owners. So I think we're recognizing that there is actually tremendous opportunity in the hotel and leisure space, but you have to embrace digital, and you have to embrace the ecosystem that's helping to build it. You can't just do it on your own with a group of bankers.
That's right.
Any final questions? One down here at the back from Yolanda.
I just wondered,
Can you introduce yourself, Yolanda?
Sorry, yes, I'm Yolanda Baldijk from Private Equity International. I just wondered, isn't there also a bit of an issue within the industry, sort of a split where you have some of the people who think, you need to engage more, you need to be more transparent. And, I know what you're doing in Sweden with the code of conduct and things like this. But, for instance, not to sort of blame anyone, but, if I want to speak to Charterhouse and I phone them, they're not going to answer anything, to say we don't have a press office, we don't talk to you. So, do you think that there needs to be a bit more of a collective, approach to tackle this at a European or even global level? Because obviously there's people like yourself from EQT who would say we need to be more transparent, but not everybody who feels this way really clearly.
I totally subscribe to what you say, and what we are trying to do maybe in Germany or Sweden or Norway or Holland for that matter, we really try to impose this code of conduct, this independent board, that even if Charterhouse in this case, they don't want to talk to you, and if they do a bad thing and they don't behave according to the ethics or whatever, they will be publicly put front page news, bad people. And we have seen what happens with private equity funds that don't face when things go wrong and they do not communicate with media. They massively regret it. And we have some examples that are very, very ugly, where they didn't do that bad, but they did not communicate with media, therefore they were crucified. So I think if that's the Charterhouse attitude, I'm quite sure 5 years from now Charterhouse has changed, or they have a very tough environment. It's not sustainable. I don't believe in it.
Perhaps I could volunteer the European TUC to take on the role of the tribunal that Thomas suggested.
The quarter-final appeal.
Yeah, exactly. And you will be untouchable, so you can say whatever you want.
Well, just on that, before we finish, and I know, Sir Brendan, you're a great Everton fan, so your predictions for the World Cup. We've done enough future about the industry. Let's finish on a World Cup prediction here. Who's going to win? Not England, obviously.
When I told a former trade union colleague I was coming to this event, the private equity, he said, that's a slightly tricky away fixture you're taking on there. And like Croatia discovered last night, the referee isn't always on the side of the away team. I think England are going to do quite well, actually. I'm quite optimistic. I'm not saying they're going to win, but I think they've got a decent chance of getting through to the final stages.
Ahmed?
Oh, I never predict. The only one I would say is I don't think England will even get past the group stage. So that's a safe bet, I would say. And those,
Be upbeat, be upbeat.
no, it would be great to have one of the underdogs win.
And which one is that likely to be?
Iran?
There's already one digital winner, and that's a company that puts the 7 cameras in place to make sure the goal is a goal and not a Wembley goal again.
Yes.
So that's one
And
thing.
who's going to win, Hans?
Boy, not Italy, I hope. So the rest I don't care.
So long as Italy doesn't win.
As
you're
long
happy.
as it is not Italy. it's all
Okay.
fine.
And in Scandinavia, what's the thinking up there? Who's going to win?
Well, our German friends always, they have no stars, but they are extremely good in collaboration and always ends up in the final. So you're one of the top ones. But I think Belgium is that would be very fun.
Surprise
That would be great to have this disruptive event.
The guaranteed winner will be FIFA.
Yeah, that's exactly.
And we'll save discussion on FIFA for another EVCA event. And on that note, we will close our hand back to Vincenzo.
Right, and
to say
I'm
farewell.
glad I have the privilege of closing and speaking after Hans because I hope Italy wins. But anyway, thank you very much to the panel.